Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video. And in today's video, guys, we're going to be going over the top 5 options plays for the upcoming week. Now, on the channel, keep in mind, guys, we do sell options rather than buy them as our preferred strategy. And more specifically, we run the put wheel strategy, which entails selling puts at designated strike prices for given premium, and if the stock maintains above the strike price by the end of the week, we just collect that premium. Think of it as a buy limit order that you're putting somewhere under the market, and if ever your order does not get filled, you get paid for even making that order. It's a very, very simple strategy here, guys, and if ever you do get assigned the stock, well, then we just take assignment of those shares and proceed to write covered calls against it until we roll out of the position with even more premium. Very, very simple strategy to run here, guys, whether you're a beginner, intermediate, or advanced investor, and is the main strategy that I choose to run on the trading portfolio that I show publicly on this YouTube channel. Last year, we made over 75% running the wheel strategy specifically, and this year we are off to a very good start as well. So in today's video, guys, we're going to recap a bit of the strategy rules. How do I pick which strikes and which stocks to write these put options on? And second, we're going to be going over the last week's 5 plays that we had given on the channel, see how those performed. And lastly, take a look at this week's 5 plays, and I have included a couple bonus plays as usual here, guys. So without further ado, let's get right into today's video. So how are we lining up on the markets this week? Well, it's going to be a shortened trading week, Monday through Thursday. Friday is a holiday. It is Good Friday. That being said, we are in the context of a very beautiful daily uptrend, both on SPY and on QQQ as well. So what we can potentially be expecting here in the early parts of the week, if we do continue after Thursday and Friday of last week's sell-off, we are just expecting the bulls to put in a higher low and continue this beautiful daily uptrend. No red flags in the market. Those were all really taken care of after Jerome Powell's statements on last Wednesday. So this week should be a fairly relaxed week in the market as opposed to last week, and the bulls should have no problem defending their respective support zones. So fairly bullish on the market this week. That being said, if Monday and Tuesday are red, it'll represent some very decent opportunities to be writing some puts. So let's take a look at some of the strategy rules to start it off to write these puts with. So what exactly are we looking for here, guys? Here are the rules. And if you haven't seen my 30-minute video where I break down the strategy more in detail and give concrete examples, I will in this video anyways. But if you haven't seen that, I'll link it at the top right-hand corner of the screen right now and down below in the description if ever you want to watch a longer form tutorial on exactly how I run this strategy. As a whole, though, it's very simple. Here are just a few of the rules. Well, pretty much all of the rules that I use when I run the strategy. Number one, we want to be doing it on a solid company. Please never write any put options or any options in general on a company that you do not want to own. It just makes managing the position, guys, a little bit cumbersome in terms of emotionally and mentally, right? You always want to be writing options or just doing anything in investing rather when you know about a lot about the company and when you like the company as a whole. It just makes managing the position very easy. So that's why we always choose to write puts on solid companies. Number two, the stock needs to be in a monthly uptrend or at least a long-term range. This just adds to the probability that the long-term bulls will have our backs. If ever we do come back into large form support zones, we know that our monthly bulls are in control and should be backing us up at those zones. So once again, trying to put all the odds in our favor that our puts end up worthless by the week end and we collect all of the premium. Number three, very, very important, guys. The company need not have earnings this week. This is super important. Should really be rule number one with a solid company. It's just very, very volatile when you play earnings, guys. You know, premiums in the week of earnings can be quite juicy. However, it does come with a significant degree of risk. Even if the company may release good earnings results, we've seen circumstances where the company posts good earnings, but a bit bad guidance for the next quarter, and the stock drops 10%, and you really think that it's kind of overdone. And if that happens, guys, and you get trapped in a position you don't want to be in after earnings, you may just have to end up taking the loss. So to avoid all of that, just do not play earnings. It's really an important rule. I play it seldomly on the channel, I do admit, but when I do, I'm extremely conservative with the positions that I choose to run. As a whole, guys, if you're not that experienced, or even if you are experienced, just staying away from earnings is the easiest course of action. Now, number four, we want to be writing puts at a support area or at least a zone of breakout retest. I always bring up this example so you can see it best. What is the support area versus the breakout retest? So take a look at Autodesk right here. So we can see Autodesk for a very long time was trapped in a beautiful weekly range. The bottom end of the range would be a support zone that we could be targeting to write short puts at. Every time it pulls down here, we can write puts and base ourselves off of the support. The breakout retest trade is when the trade breaks to the upside, beautiful weekly uptrend, and we get this little retest zone right here. So weekly uptrend, crack of the upper bound of the range, and then we get the retest and then run a very high probability trade as well. So those two trades are the trades with the highest probability, which is why we choose to go for those. Now, number 5, we want to be writing on red or flat days. This ties into the next point of writing next to the expected move. So in any given week, guys, you can find the expected move of a given stock. If you just go to optionsai.com, free website, they have an options move calculator here. And if you just pull up any random stock, let's say Apple, it'll give you the expected move up or down. Here we want to be looking at the one to the downside here. We always want to be writing below the expected move, most preferably on a red day here, guys, right? So it just goes to argue here, if Apple stock, let's say, opens tomorrow morning and opens in the 171s or 170s, we're getting really close to the expected move, and it opens up some strikes 169 and below our expected move. It just puts more probabilities on our side, guys, that the stock is going to bounce from the lower end of its expected move and really have a good chance of expiring worthless. So that's why we try to write on red and flat days. Coincidentally, should also be close to or below the expected move to put all of the probabilities on our side. And before last year, guys, we want to be writing between 0.5% and 1% in weekly premium. So if I'm choosing to write those Apple puts, let's say at about $169 or less, well, I want to be targeting 0.5% to 1% in premium. Now, on Apple stock specifically, if you just want to do the math on that, if you want to do 1% of, let's say, let's take a strike price 167, right? 167.5. Well, you want to be finding at least $1.67 on the bids when you're looking through the options chain on that put specifically. It's just this, guys, after years and years of experience, that is my sweet spot. And it tends to be the perfect location where you meet risk and reward at the same time. It's just the best sweet spot, in my opinion here, guys, where you can still make a decent amount of money, but you also have a fairly wide margin of error to the downside. If ever you write the put and the stock doesn't move in your direction at first glance, pretty much, or right after you write it, this is a very good chance of expiring worthless here. This pretty much, when you're writing 0.5% to 1% rule on your weekly premium, you're pretty much going to be writing pretty much 26 to around 50% on an annualized basis if you're doing this every single week. So very, very powerful, and still gives ourselves a nice margin of error. And then lastly, we want to take profit at 90% of the contract value. This is very important since most of our trades will be fired off on a Monday or a Tuesday. The strategy requires very little position management thereafter. Once you open the trades, you basically let the theta decay, otherwise known as the time decay, do the work for you. And since you won't be at your computer, maybe Wednesday, Thursday, Friday, we just want to set take profit orders at 90% of the contract value here. So if you write a put for $1 or $100, let's say, you want to put that take profit at about 10 cents. So the market just takes you out potentially if that happens midway through the week. So with all that being said here, guys, let's get into last week's top 5 options plays. So the first one we were looking at last week was Google, and we wanted Google below 138. However, Google, what happened on Monday? Well, we got a beautiful surprise by the fact that they were potentially engaging into partnership discussions with Apple for Apple to use Google's AI software, right? So when that happened, obviously Google stock moved way up on that day, 4.5%. We were looking for the 138s. We were kind of trying to get this little breakout, and then we wanted to retest this lower bound right down here and potentially get up for another leg of daily uptrend. But that never happened, guys. The trade was never available to us. Monday just happened, and we gapped up right away, basically took out all our capacity to take any trades down here. So it was a no trade on me for Google last week, guys. Really, we could have not targeted this area simply because of the gap up. So Google performing well on the week, just no trade on the short puts for us. But as you have may been familiar on the channel, guys, we've been writing a ton of Google Premium here over the past couple of months around the 140 zone. I'll be readjusting those targets to the upside here if we get a little bit of consolidation in the near-term future. But for now, no trade on Google last week. And even this week, guys, not really much available on Google either. Now, the second trade we were looking for was Apple. We were looking for Apple, guys, down in the 167, the expected move for Apple last week was about 169. You can see right here, this was our Friday's candle when we were expecting an expected move of 169 to the downside. Now, we wanted to be writing below that. So we were targeting 170 was above the expected move. I was saying that was my aggressive play. 167.5 would have been the safer play, respecting the strategy rules directly. So it was either the 170s or 167.5. Needless to say, Apple on Monday morning after the news with Google also benefited from a little bit of gap up, running right up into 173, 174. So that really took both of these trades off the table, right? But then, obviously, after the Thursday lawsuit news, we're now revisiting these areas. But for a better part of the week, Monday, Tuesday, and Wednesday, the stock was trading much too high for us to be writing puts around the 170 or 167.5. So that's why Apple was a bit of a no trade situation all of last week, unless you try to pick this bottom here on Thursday and Friday for this coming week, which will I'll feature this play on this week in the top 5 for this week. But as of last week, guys, there really wasn't much premium available down here after this gap up open. So we just didn't play Apple last week as a whole. Now, the next one we were looking at here, guys, was a combo play. We were looking at ON Semiconductors and AMD. Let's cover ON Semiconductors first. So ON Semiconductors, we were looking for a little bit of a dip down here into our big green box, which is the sweet spot, in my opinion, for this stock. And we were really looking as close as possible to $71 or $70 as possible to really get into this support zone. Now, what did ON Semiconductor do last week? Well, you can see here, guys, this was the Friday candle, and we based our analysis after this down here. We're expecting a little bit of a move down here. Now, ON Semiconductor did actually open up for a trade here on the Tuesday morning session when we dipped down into 73. The 71 strike and even the 70 strike became slightly available here for a majority of the morning on Tuesday before the stock rallied up. So that was a very beautiful trade. I did not take this one specifically, even though it did respect my criteria. I waited for Jerome Powell. I took it a bit easy last week. And after he spoke, I took the other play that we were looking for on semiconductors, which was AMD. So AMD as well. This was the last Friday's close right here. You can see it. We were trading around 190, and we were expecting maybe for this daily consolidation to continue. And I said, if on Monday or Tuesday, we open up down into the lower 180 range, it may open up 170 or better. We were looking for 170 or in the mid 160s, and that did open up here, guys. I took it myself after Jerome Powell. It was on Wednesday afternoon, so obviously couldn't get a full week's worth of premium. But we did get the 167.5s on the dip on Wednesday, and we got them for about 60 cents. Obviously, AMD ending way above there on the Friday close, so we were able to pocket all of that premium. That was a very juicy trade. That one was available on Tuesday and also Wednesday pretty much throughout the day as the stock was trading around 175, 174. The 167.5s down here were on the table. Now, moving on to the next stock that we wanted to trade last week, that one was Shopify. Shopify, another beautiful trade location. Shopify is actually a breakout retest trade. So take a look at the monthly. We are in the context of a general monthly uptrend, and now we're breaking out and just looking to retest this yellow line right here. If I zoom in on the weekly, you'll see it best here, guys. That's the previous resistance area. Should now be acting as solid support. So we wanted to get as close as possible to $70 as we could. Now take a look, guys. Here was the Friday candle off of which we based our analysis. We were really looking for a little bit of a dip, guys, into the lower $73 range. Unfortunately, that never really happened. So we were never really able to get our $71, $70 strikes, as we got a slight little dip here, but the dip was not enough here, guys. We dipped into 75. I was looking at those contracts Monday and Tuesday, and you really couldn't get above $73 for any juicy premium. So we wanted 71 and 70. Just didn't happen. The stock proceeded to move up the rest of the week, but still love this trade location on Shopify. So that's another one that unfortunately the idea was good, but the trade just moved up opposite to the direction we wanted to earlier on in the week, and it just didn't offer us any opportunities to trade it down here. I do still like this one, however. Now moving on to Palantir. So Palantir as well was one that we were kind of looking at here. Take a look on the Friday candle, after which we based our analysis here. It was down to about $23.50, and we were looking for potential bearish follow through down into the lower $22 range. And we were saying if we could get in the $22 range, we were targeting the 21s down to about $20, as low as possible, because this is a beautiful area of support. This green box right here, previous 52-week highs as of last year. We really want to get as close as possible into this zone, but unfortunately, Palantir was one as well that on Monday and Tuesday really didn't dip down much at all, getting as low as about 23, but didn't really come down into the 22s where we needed it to open up those $21 and $20 strikes. So unfortunately, Palantir as well, still, guys, another stock that we were just not able to trade. The ideal was good, the level was good, but the market just did not move in our direction to unlock those trades on the early part of the week. So I am still interested in Palantir down here if we do come down here, but as of last week, another one one that unfortunately was just not tradable with that price action. And the last one, guys, that we were taking a look at a few different plays here. We were taking a look at Intel, right? This was one of the bonus plays. Intel down here in the $41 range, just a beautiful area of current support. All your major moving averages on the weekly are sitting right there. And if ever we were to break through there, guys, well, 40 down to $38 becomes a big area of support. This green box right here was huge areas of price action in the past, and that was pretty much the extent to which we could have went to the downside here. So we were really looking for around 41, and even the 41s here, guys. Let me just log in back to my portfolio if I can, because I want to show you guys that I did do the Intels. So as you can see here, guys, the Intels, I actually took them after Jerome Powell was pretty much done speaking. We did find the 41 puts here for about 22 cents, which was respecting the 0.5% rule. So I'm very happy with that trade. And additionally, on the Intels now. And the other one we were looking for, guys, last week as a potential bonus play was SoFi. SoFi, I really like this company down in the $7 range, between $7 and $6.50. In my opinion, you really can't go wrong. It's massive support for the stock, previous resistance. So this level should have a good job holding up. And the company has most recently turned the corner to profitability. The last quarter was finally a profitable quarter, and they do see that as guidance for the remainder of the year. So company really turning around, very favorable financials at this moment in time, which is why I do enjoy playing them down here at a lower valuation. And I can expect a little bit of a swing trade from the $6.50 to $7 range, all the way up to about $9.50, $10 would not be surprising for this stock. So all the time that SoFi stays down in these lower areas, I'm always checking it every single week to see if I can make a play, maybe for the 1 or 2 week puts. Keep in mind that the stock price is so low that usually we're going for put options anywhere between the 5, 10, 15 cent increments there. So just keep that in mind. Now, that's pretty much everything for the plays last week. So we had a relatively good week in the portfolio last week. This is how much premium I generated in each one of these positions was featured on last week's videos in terms of the portfolio recap. So we made about $1,250 last week. Fairly good week. And here are all the plays that were made. I also recapped the entire thing on the Friday's video in case you missed that at the end of the video. So this week should be another healthy week of premium generation as well. Now let's get into the plays for this week, shall we? So in terms of the plays we have going for this week, we're once again going to be playing Apple. Why? Because it remains in our heavy area of support. You guys know that I love this lower 170 range, and I already have been assigned 200 shares of Apple. One was a few weeks ago when we broke the 180, and the second one was this past week when I wrote the 175s after Jerome Powell was speaking here. We wrote them for 28 cents when the stock was trading roughly, at the high of that day at that point, right? About 177 range. So I gave myself $2 worth of wiggle room, and I thought it was enough for only 2 days remaining of trading. And then we got hit with an unforeseen lawsuit on Thursday. So unfortunately, we did get assigned on these Apple shares. My 200 shares now cost basis is about $176.86, and I'm going to healthily ride this back all the way into the 180s, guys. So that's just for my trading account, but I will continue to play Apple if we continue to trade in this lower 170 range. The expected move for Apple over the course of this week is 169.11. So we want to be riding under that expected move. Now, Apple trades in $2.50 increments. If you don't know what that means, let me just show you on the options chain right here. You'll see that in terms of the strike prices, they only trade in $2.50 increments. So 170, 167.5. So now we're going to be probably having to target the 167.5s. That is under the expected move of 169.11. Now, if you're a very aggressive bull and you love Apple and you don't mind, I can play the 170s, and I have in the past. It's above our expected move. Now, those currently are offering about 92 cents, which does respect our 0.5% rule. 0.5% would be about 85 cents on this, guys. And if you don't know how I'm doing the math in my head, if you want to know what 0.5% is, just do half of the strike price in cent increments. So half of 170 is about 85. And so we need to see about 85 cents on the bid right here. If you want me to do the math in front of you, it's 0.85 divided by 170, and you'll see that it's exactly 0.5%. 1% obviously would be $1.70, but you can see that's too close to the current strike price. So if Apple has a dip, though, the best case scenario is Apple has a little bit of a dip down maybe into the 170s early tomorrow. And if they dip into the 170s, 70s, they may just be opening up the 167.50. This is my preferred strike. On this one, guys, just the same, we would probably need to see about 80 to 85 cents on the bid for it to be worth our while. Now, the second trades we're going to be looking at, guys, this is going to be a trio because it's all pretty much the same trade in the same industry. So this is going to be a semiconductor trade for the upcoming week because it's in one of our hottest niches of the market currently, right? So the current trade it's set up is going to be AMD. AMD, the expected move to the downside is about the 172.53, this red line right here. Why do I like it? Because we're in the context of an overall weekly uptrend on AMD, and this prior area is massive support. Not only do we have the protection of the previous all-time high, that's this lower area right here, 163 down to 157. That's an area that's going to be extremely tough for the bears to crack. I'm not even targeting down there. I'm targeting a bit lower than the expected move. If the expected move is 172.53, and we're expecting AMD to maybe come slightly down Monday and Tuesday, well, the expected move currently, guys, is not that far away. It's about 3% away. AMD can do that in a single day, right? So if ever we open up towards the expected move, let's call it 175, 174, it probably will open up the mid 160s. I would love if I can get the 167.5 to 165s again this week, similar to what I played last week on AMD. So let's take a look at AMD premiums right now below 170 to see what we can get. And you can see here, guys, expected move 172.53, already below that. We do have some decent premium right here, right? 170 is paying 93 cents. Half of this, we just did it on Apple. You need to see 85 cents minimum. So 170 is respecting it currently, but I would love to see the 167.5s. And if we can get 85 cents on the 167.5s, that would be a very, very decent trade in my opinion. That's what I'll be looking for. If we take a little bit of a dip here Monday or Tuesday down into the mid 170s, 175, 174, it will probably open up, guys, the 167s, or maybe even if we're lucky enough, if it takes a decent little red day on Monday or Tuesday, you may be even able to find, the premium on the 165. So between these two strikes, 167.5 and the 165s is the optimal area in my opinion. The second trade as part of our semiconductors trifecta or trio, if you will, for the week will once again be ON Semiconductor because it is once again very close to our support zone. So all of these semiconductor trades that I'm going to show you are coming up on big areas of weekly support. Now, expected move on ON is about down to 72.25. I really want to be getting as low as possible, close to $70, right? $70 is going to be ideal for me personally. So let's take a look at ON Semiconductor and see what we can find on these 70s or 71s. You can see the 71s here, not quite paying 0.5%. 0.5% would be about 35, 36 cents. So it's not there yet. So ON really needs to come down a little bit here, guys, early on in the week. If we can come closer now to the expected move, so if we can drop here on Monday, maybe 1%, 2% here off the open down into maybe the 73 range, most likely then that will free up the 71s and the 70s, very juicy area. So those are going to be the strike prices that I'm looking at for ON Semiconductor. Need to see 35, 36 cents. So we want to get as low as possible. Keep in mind, guys, if this one for some reason goes down 4% early on Monday, right, down, all the way to in the 71s, well, obviously we're not going to do the 71s and 70s, right? It's going to be too close. So then we'll be wanting to target the 69s, 68 maybes. So readjust your targets, guys. If ever they open hard red on Mondays, 3-4%, we get below our expected move, readjust your targets to the downside. Just go a few strikes lower, still trying to find that 0.5% rule on your premium. So now the last one of the semiconductors, gang, is going to be Intel, the one that I played last week as well. Same concept. We're really targeting the 41s down to $40 strike for the same reason as AMD and ON. We're coming up on big weekly support right now, down here $41, $40, right? So we want to be making the most of this support area while still understanding that we're in the context that semiconductors is just a very bullish trade right now. So Intel looking good. Let's find how much premium we can find down there at the 41s and 40s to see if something's available right now. If not, we'll wait for Monday morning here to see if we can maybe get a little bit of a dip. If we get a little bit of a dip, expected move, right, 41, 43. So we want the 41s or 40s. And as you can see right now, there's not much available, unfortunately. Even on the 41s, it's only paying 14 cents. We need to see at least 20 cents for this to be worth our while. So 20 cents across the 40.5s and 41s. That's what you want to see as low as possible while getting that 20 cents, right? So Intel really would need to have a bit of a negative start to the week, come down towards this expected move into the 41s, and that may free up, guys, a few of these strikes, maybe the 40s, 40.5s for 20 cents. That's what I'll be looking at. So AMD, ON Semiconductor, and Intel are my three favorite short put plays for semiconductors for this week. Now, the third one we're going to be looking at here, guys, is one that's been featured on the channel a lot, and that's Caesars Entertainment. Caesars Entertainment is also in a relatively hot sector this year, which is also known as travel and experiences. We've been seeing that a lot. All the travel and experiences companies that have reported earnings so far have said that the consumers have been favoring going out and spending money on experiences rather than spending it on goods. So Vegas has been very hot. Caesars has been a beneficiary of that. That being said, the stock price hasn't had much lift. It's currently trading towards the lower end of our support zone here, guys. So take a look at this long-term range, right? It's been in this range for a better part of the last 2 years and really hasn't broken it much. Whenever we come down below $40, $39, $38, that's usually where the stock does find its temporary bottom. And this week is just the same. We're coming down into this level. I've played this stock a ton over the past couple of months in these same levels. Now what we want to be targeting, guys, is $40 or lower. The expected move on Caesars this week is 40.1, so we want to be going lower than that, 40 or perhaps even 39. So let's take a look at the premium that we have available on those strike prices to determine whether or not it's good enough now or whether it needs to drop. So here you can see, if we're looking from 39 to 40, you can see on the $40 strike right now, it's about 25 cents. Now, the margin, the room that we have until that $40 mark is roughly 3% off the current share price right now. So it gets even better. If Caesars has a little bit of a dip here into the 40.8, 40.9 on Monday, that'll probably free up, guys, the 39.50s. We're looking to get as low as possible here, depending how red Caesars opens on Monday or Tuesday, right? We want to get as low as possible, 39.5, 39s if we can, right? And for those, we want to be getting at least 20 cents on the bid. So that's going to be a juicy trade that I'm looking to make on Caesars. It's been one of my favorite trades that I've been able to make here in the past few months as we've traded around these very, very juicy support levels. Now, the next stock we're going to be taking a look at here, guys, is a cybersecurity play. It's going to be Datadog. So this is going to be number 4 for the week. And Datadog, similar, right? Where this is pretty much a breakout retest trade. So we're in a beautiful monthly uptrend. We're just looking to break out of our previous highs and then retest them as support before embarking on our next leg higher here. This company has done a great job of turning the corner to profitability, have just put in their first profitable year ever, and their guidance for this year was very, very good. So they should be continuing on their profitable journey, and the stock price should be benefiting from that as well. That being said, we're currently coming up on this big green box, which is the support zone. We're talking pretty much, it starts at 120 and at the bottom goes all the way down to 110, but really the bulls have a decent first zone right here, call it between 120 and 114. So that's the area that I'm looking to play off of. Now, the expected move for Datadog this week is down to about 119.45. So we want to be getting as close as possible as low as possible under this expected move, preferably 119 or better. So let's take a look at the premium available on Datadog for this week, 119 or better, and to see whether or not we got enough premium. So here you can see the 119s, guys. We're looking for about 60 cents, right? And we do have it at the 119s, but I want to be getting a little bit greedy with this one. So if we get a little bit of a dip here on the Monday or Tuesday session, which brings us really around 121, 120, that should free up even lower for us, guys. Maybe coming for the 116s all the way to 118s. If I can find, roughly, let's call it about 60 cents, right? 55, 60 cents on either one of these three strikes, 116, 117, 118, as low as possible while getting our 0.5% rule, that's going to be the preferred area that I'm looking to be going for because it's below our expected move and really coming towards the lower ends here of our most recent support, right? Looking very, very good on this stock. Would not mind being assigned at those levels. That's why I'm taking this position myself, looking out for it this week. And the last one we're going to look at here, guys, is Shopify. So Shopify has been featured on the channel now for a few weeks running because it maintains in a relative similar trading style to Datadog, right? Nice monthly uptrend, and currently we're just in a monthly pullback looking to use this yellow line as support, right? So that's what we were saying last week, and this is what we're going to be looking out for as well this week too. Now, the expected move for Shopify is 76.15. That's a bit too high, guys. At this point, we want to be targeting $73 or better. 73 down to 70, as close as possible as we can get to this yellow line right here. Now, that being said, since the expected move is so high, we really need Shopify to come down Monday or Tuesday. If Monday or Tuesday we can come down into this 76 zone, it may free up 73 or better. So let's take a look at how the premium stands on Shopify right now. And you'll see that it's not enough. So it needs to really come down a bit here Monday and Tuesday. Take a look, guys, 73 to 71, not paying out enough, is it, right? So we need to see about 35 cents on the bid if we want to take this trade right here. And currently 35 cents is really not even offered at the 75s, right? So Shopify really needs to come down kind of hard here. Going to be looking for maybe a 2% decline over Monday and Tuesday. And if we can come down closer to the 76, it probably will free up the 73 or better. So those are the strikes that I'll be looking out for Shopify this week. Beautiful trade at support, and Shopify also doing a great job at running a leaner business. Profitability has netly improved over the past 2 quarters, and their guidance for this year is going to be very good as well. So all the stocks that I really show on the channel here, guys, are all companies that are fundamentally strong, moving in the right direction. It just makes trading them a whole lot easier, right? And I just want to show you guys a few bonus plays. So those were the top 5 for the week, but I do have a few bonus plays that I really keep on the side all the time, right? Here's going to be some that I want to play a bit more aggressively. So I said Google. Google is going to be our first one, guys, because although it is slightly more elevated than it has been in the past 2 weeks, right? We have a nice little gap fill territory. If ever over the next couple of weeks, guys, we see Google retrace here down into the 147s, I'm looking 147, 145 all day to play these short puts. Would not mind playing Google in this area as well. I believe Google is poised to really start a beautiful run past its all-time highs here in the next month or two. So any and all opportunities to play dips, I will be looking to play aggressively. Another one that I'm going to be looking to play a bit more aggressively is Amazon. Amazon as well, on the verge of really breaking out to its target of all-time highs, right? Previous resistance, currently resistance. Once we get over and above this here, guys, if we can mount it and retest, I'm going to be looking to play Amazon fairly aggressively. Even if we dip over here over the next couple of days, guys, I may get a bit more aggressive on Amazon, play it down 173 to 171. I really do believe this one is going to run hard in 2024. So I'll be playing this one a bit more aggressively. The other one that I was talking about last week is SoFi as well. SoFi, I want to be playing this one a bit more aggressively around the $7 strike. The problem is that the premium is so small on SoFi because of the share price, right? So to get 1% at $7 roughly, right? You're almost there at 7 cents. So usually what I want to do here, guys, is I may want to go out even one week ahead, right? I may be going for the 2-week options, looking to pull some premium forward. And for that, I may be looking at the April 5s. April 5s are paying 12 cents. So if SoFi gets closer and closer to $7, right? I may even write when they're very close or at the money, and I'm going to be looking to juice this one, right? I'm going to probably be looking for closer to 20 cents on this one. So that's another one that I'll be looking to play a bit more aggressively just because I like the level so much. And then there's other ones that, there's 2 that I kind of bring up every now and then. They are part of the whole consumer discretionary trade, Nike and Starbucks, right? So they're not the easiest trades to make, but they are coming into very juicy levels. The reason that I say that they're not easy trades to make, guys, is just because the implied volatility is so low. You don't get much premium unless you're literally right on top of the current strike price, right? Unless you're at the money. So take a look at Nike right here, currently trading at about $94. And you'll see you really don't get 0.5% unless you really go right up to the 93s. And 93s is like, it's right there. It's not too far off the share price at all, right? Like 1% away. So Nike and Starbucks, even though they are in relative juicy area of support, here's Nike and here's Starbucks as well. I love their valuations and I love their support levels down here. It's just they're one and the same for this trade. For the trade to unlock, you really need to have a negative 2% day on Monday or Tuesday, which will really open up some strikes further below, right? Not only, this is too close. I want to open up some strikes maybe 2-3% away. And that only happens when you get a little spike in volatility, aka a negative 2-3% day on a Monday. Then I would not be opposed to playing these as low as I can get here, guys, while still respecting our 0.5% rule. So those are just 2 companies that I always have on the back burner. As well. So hopefully this video has been educational for that here, guys. If you found it educational, if you found something of value here, please consider dropping a like. Would really appreciate it for the algorithm. And consider subscribing to the channel if you're new. We do these top 5 videos every single Sunday night. And so far, I've been doing them for pretty much 2 months at this point. And all the trades, well, it either goes one of 2 ways. Either we can't get into the trades because the opportunity just never presents itself, in which case the idea was good. We just never open the trade. But the trades that we do open, every single one of them, guys, has expired worthless by the Friday. So you've been able to just collect all of this premium and pretty much not take assignment on any stocks. The only stock of all of my calls that you would have been assigned was Apple 2 weeks ago when I publicly went with the 172.50s and it closed below 172.50. But currently, for the past 2 weeks, if you do have that play, you would have been able to write the juiciest covered calls ever at 172.50 or even maybe 175 and collecting some juicy premium. So your break evens should now be below $170. So you should be chilling with that. But as a whole, guys, it's been a very, very profitable series so far. And I'm just going to continue these videos every Sunday night to show you guys my trading style and what I look out for. So as well, guys, if you have any questions on the strategy or any questions on the plays specifically, or if you have a play that you're considering and you want my opinion on what I would do in that situation on that given stock, just let me know down below in the comments and I will be sure to answer you usually within the first 24 hours. So take care, guys. I will see you in tomorrow's video where we tackle our usual daily market recaps Monday through Friday. So take care, have fun, have a great week of trading. Peace.